Greetings, members, one and all of the Salivation Nation. Stagflation in China means higher gold and silver prices. Let's explore. The global economy is very local in many ways. What happens in one country can affect another. And it is obvious now, for those of you who are not living under a rock, that China is indeed a superpower. They are very close to their economic activity to where we are, but there is a lot that is at stake, and there's a lot of trouble ahead for China. This article from CNBC, China's economy is showing signs of stagflation, economists warn. And it is something that is very concerning. There's signs of stagflation in China as prices continue to rise, while the latest manufacturing data show production slowing, economists say. China's factory activity contracted more than expected in October, shrinking for a second month, an official survey released on Sunday showed. The official Manufacturing Purchasers Managers Index for October came in at 49.2, falling below the 50 level, which separates expansion from contraction. And there was a chief economist at Pinpoint Asset Management, Zhang Shui, said that the production index has dropped to the lowest level since it was published in 2005, excluding the 2008 global financial crisis and the COVID-19 outbreak in February of last year. In contrast, the output price index has risen to its highest level since it was published in 2016. These signals confirm that China's economy is likely already going through stagflation. He said in a note on Sunday, stagflation is when the economy is simultaneously experiencing stagnant activity and accelerating inflation. The phenomenon was first recognized in the 1970s when an oil shock prompted an extended period of higher prices but sharply falling GDP growth. A worrying sign is the pass-through of inflation from input prices to output prices. The input price inflation has been high for many months by now, driven by the rising commodity prices. And there we go. And commodity is the key word here, which ties into gold and silver. Gold and silver as commodities, folks. I think that they could rise as commodities as we jump through the next couple of months if this continues in China. And the jump of the output price index in October is alarming, said Zhang. And that's the thing is, usually on Sunday nights we watch the markets as they open up in China, and it'll be very interesting to see how this plays out. And news like this. Evergrande hires restructuring advisors as crisis escalates. This was sent to me by Rocky Superstar, and surprisingly I was able to open it. Sometimes Bloomberg will allow you to get in there, but you have to take advantage of it when you're in there because they only allow you so many per month of views. China Evergrande Group issued a dire assessment of its financial health, saying it faces tremendous liquidity strains and has hired advisors for what could be one of the country's largest ever debt restructurings, one of the largest businesses in China. The appraisal was Evergrande's most downbeat since market confidence in the developer began deteriorating in May, and following a spate of protests over the past week by angry home buyers, retail investors, and employees demanding that the company make good on its obligations. Evergrande's dollar bonds and shares sank as market priced in near certain likelihood of default. The extent of the losses facing investors will depend in part on whether Chinese authorities and state-run banks take steps to limit the fallout. Evergrande has emerged as the biggest test yet of President Xi Jinping's willingness to let over-indebted companies fail as he tries to wring the excess out of China's $54 trillion financial system. You tell me, there's not a lot of debt and debt-based economy there in China as well. We're not alone. There's Everybody, it seems like everywhere, we're living in a debt-based society these days. And everybody's going into debt. Crazy, crazy. Under pressure here, and this chart gives you an example of what's going on with the everything is down, down, down since about May of this year. Crazy. Without state intervention, the risk that Evergrande enters a downward spiral. And the developer said in a statement on Tuesday, our property sales will drop in the normally buoyant month of September because of waning confidence among home buyers, who often need to give the company large down payments for properties that they may take years to complete. And there is no material progress in plans to sell stakes in its electric car and property services units, adding that the planned disposal of its whole headquarters in Hong Kong hadn't been completed. But we can look here. Shares of Evergrande has fell as much as 10% on Tuesday morning in Hong Kong and have lost about 80% this year. 80%. It's crazy. Its electrical vehicle unit tumbled as much as 20%. Evergrande's 8.25% dollar bond due 2022 dropped 4.8 cents to 27.7 cents. So there's a lot going on here that is concerning. Now, most people think that, or some analysts think that, well, this is a crisis that's largely contained within China. But China is already talking about stagflation. And if this goes down and if Evergrande falls, then who knows what that could do with a lot of the economy in the East. And that will have an impact on the West, too, and the United States. Everything is kind of interconnected these days, somewhat of a global economy. Everybody's dependent on everybody else, it seems like. And sovereignty is essentially merely kind of kind of a word that they use for politics. But in reality, economically, there's a lot of reliance on each other. And again, there's no problem with free trade or trade among countries for resources to help each other out. But at the same time, there's a lot of ways that we can be taken advantage of, and certainly human rights violations that China is involved in, among other things, are certainly concerns here. But Evergrande, who denied rumors late Monday that it would file for bankruptcy, hired Houlihan Lokey and Admiralty Harbor Capital as joint financial advisors to assess the firm's capital structure. Houlihan Lokey has one of the largest financial restructuring operations globally, having advised in some more than 1,400 cases, with more than $3 trillion in debt claimed since 1988, according to its website. Its largest case by assets was Lehman Brothers Holdings. Well, we see what happened to Lehman Brothers, so this is certainly concerning here. And so what could this mean? Well, if we look at where we're at here, monthly interest payments due in dollar bonds in this graph here, it gives you an idea kind of where things stand throughout the course of where it is going to be happening through the next couple of years with them. But if they were to file for bankruptcy and go down, I believe that along with the Chinese economy in stagflation, and we're having inflation here in the United States, that is going to bode well, I think, for assets such as gold and silver. Now, obviously, there is other investment strategies people are taking. It's a lot easier these days, but they're riskier as well, too. Safe havens are what people want to go to. Will people see other investment strategies as safe havens? Some people do think that Bitcoin is a safe haven. Some people feel that real estate is. When we know how the real estate market turned out, and we saw that during the 2007 2008 crisis. My feeling is that gold and silver, these are the metals to have to protect your wealth over the course of a long period of time. And I believe in having the physical and maybe even investing in some companies who deal with gold and silver, but you have to do your due diligence and research on those companies, whether they be mining companies or ETFs or what have you. But gold and silver, in any case, no matter how you diversify within those metals, having them as part of your portfolio in the physical form well, more than likely they won't fit in a portfolio. You got to put them in a safe and keep them safe, and you will pay for that by spending extra money on premiums. But to me, that's worth it to have the physical in your possession. So there you go. Fascinating indeed. Gold and silver come in many different forms, and I believe it's something that does go up and down in price. The spot price does, mainly because of the electronic markets. But in reality, you can, to some extent, almost ignore spot price once they are in your possession, because it's all about weight, all about value as opposed to price while they were in your possession. And so therefore, if you were to try to sell these metals in March of 2020, for the brief moment of time when it was very, very low in price, well, you would have lost out, certainly by then. Or for a very brief amount of time, if you were to sell them in the market highs in August of 2020 for gold and April of 2011 for silver, well, it's only for a brief moment, a fleeting moment where you may have cashed out and made a lot of money, but what good would it have done you at that particular point in time as far as being able to protect yourselves, because the money is out of the protection, which is the gold and silver themselves. But that's sort of a subject for a different topic, a different video perhaps. But this is talking about China. What China does and what happens there affects the whole world. And even though it may not be direct, even though we may be somewhat cushioned because Evergrande is largely within China, still, it can really bring down a lot of economic activity within that country. And with the debt, it could be a collapse. It could be a string of dominoes. Those string of dominoes from within the country is certainly going to have an effect, especially if it's a hard hit. Now, more than likely, they're assessing it, and we'll see the debt restructuring. We'll see how that plays out. But with stagflation already on the rise in China, it makes you wonder. So there you have it. Thanks again to Rocky Superstar for sharing this information with me from Evergrande. And I would like to extend a multitude of gratitude to you all for taking the time to watch. And you watched to the end, which I very much appreciate. And I want to encourage you to please rate this video. That means to take your thumb or your finger or both, click that mouse button over top of the thumbs up button and make it highlight that son of a biscuit, or press it with your thumb if you're on a tablet, what have you. That does help. If I can get one view or one thumbs up for each view, that would be amazing. It's never happened before on a video that I know of on YouTube, but hey, there's a first time for everything. And also share this video with other social media platforms, because I think it is an important topic to get out there. And comment and subscribe.